Hey guys, what's going on? Marat here over at the Lending Group. Today, I wanted to talk a little bit about condo financing, and this is going to be a little longer than usual. I might have to break it up into two parts. We'll see what the social media gurus and editors think of it. I wanted to start out with the fact that there's two ways to buy a condo. And this is specifically important if you're looking to purchase a condo in South Florida, right? Or anywhere in Florida for that matter. As many of you know, a couple of years ago, there was a collapse in South Florida. Building collapsed, and that caused a lot of regulation and changes in the way condos are being financed. So, number one, there is what we call in the industry warrantable condos, right? Those are condos that are approved for guidelines by the agencies, right? What do we know and who are the agencies? That's Fannie Mae or Freddie Mac. They set out the guidelines for conventional loans, and if those condos meet those particular guidelines, then we are able to finance them under the best possible terms for conventional loans. And then subsequently, you have two other subdivisions of those condos. You can review a condo, what's known as a full review or a limited review. The difference simply is whether or not the financials of the condos being reviewed, if we're looking at the balance sheet, if we're looking at the budget, etc. If you are in Florida, a limited review allowed when you're putting down 25% on a primary residence. Second home and investment property, it is 30%. Everywhere else in the country, you can put down as little as 10% and still qualify for a limited review when purchasing a condo for your primary residence. Why is a limited review important? And this just so happened to me. You know, I've been doing condos for a very long time, since 2003, but we don't know how many unit owners pay their dues on time, right? And if you're putting down 10 or 15%, as my situation called for, a full review is required. So we request to know how many unit owners are delinquent on their HOA fees. And if that percentage is over 15%, it disqualifies the condominium from agency financing. Again, agency being Fannie and Freddie. This is obviously unpleasant for buyers and sellers because most of the time it's discovered mid or late transaction. And I'll talk a little bit about what we can do in order to avoid those things in a couple moments here. The second way to get financing for a condo is for portfolio lending, right? Portfolio lending is non-agency financing. These are alternate sources of financing, and we can provide financing under different structure, maybe using no income verification such as bank statements or your 1099 or CPA letter. So a variety of other ways to verify income which are non-traditional. And then you can finance a condo that is non-warrantable, meaning it doesn't qualify for agency financing. So those programs are available. They are more expensive. They are more expensive in both rate and fees. However, if you're really set on purchasing this particular unit, you may be able to get into the unit at a little more costly in today's market, and then wait it out until the condo association improves, whether it's the structure or their financial situation, and then hope that you can refinance with one of the agency products. Now, why is it important? And what can you do to avoid some pitfalls? So the worst thing you could do as an agent or as a buyer is put in an offer after you get pre-approved, because we as a lender, we issue a pre-approval based on income and credit on your down payment. We issue a pre-approval, and then you go out and shop. And if you decide you're going to shop for a condo and you put in an offer without checking with your lender if that condo is approved, you can get yourself into a little bit of a mess, right? So it is very, very important that the way that you can ensure a successful transaction is, whether you're an agent or a buyer, check with your lender first before putting in an offer on a condo. Now, If you're working with experienced, reputable lender, again, and I always recommend working with a local lender because they're able to do these things for you rather than, conglomerate. You want to call your loan officer and ask them, hey, I'm buying such and such condo. Can you please check if this is an approved condo? Your loan officer should have access to an approved list both internally, right, with their institution, as well as the agency approved list. And they can check against that list. Now, that list does get updated pretty frequently, so things can change mid-transaction, but this is a very, very good way to ensure a smooth transaction. Hopefully, this was helpful. Again, some key points that I went over that I just want to touch base on. There's two ways to buy a condo: using agency guidelines or portfolio guidelines. And it is very important, just like checking possibly the homeowner's insurance, if there's been any claims against the property, if you're buying a single family, check with your lender if the condo association and the condo building that you're purchasing is approved by one of the agencies or is on the approved list in their internal condo approved list. Hopefully that was helpful. If you have any questions, please reach out to me at meetwithmarat.com. I look forward to working with all you guys. Take care.